We're kind of citing some of the sales declines and missing the estimates here, but the stock is still up 4%. What do you think investors are seeing in this report?
Hi, good morning, Frank. Thanks for having me. I think they're seeing relief. I think there was a lot of fear that the print could have been a lot worse, especially since throughout Q1 we've seen some weakening of data, especially in Asia. And also we had the carrying profit warning. So numbers coming in just a touch below what were sell-side expectations or consensus, I think gives a sense of relief.
Right. You're setting the carrying profit warning for our U.S. audience. That's the company that makes the Gucci brand. I want to talk to you a little bit more about this report. When you look deeper into it, one of the biggest weak spots were wine and spirits. Do you think we're starting to see a bit of a divergence when it comes to soft luxury, wine and spirits, and hard luxury, things like handbags and watches?
Yes, the cognac division, which is a big profit contributor within that division, has suffered from very big destocking, especially in the United States, where we saw big increases in stocks by distributors through the pandemic. I think we've already been through around 12 months of quite significant destocking there. So that's a very specific situation that we're seeing there in the spirits industry compared to handbags and luxury, which are seeing a slowdown themselves. But I think they're not suffering from the same level of destocking that we've seen in spirits and wine division.
One of the bright spots in this LVMH report was travel retail. Consumers from China spending in Europe and also in the United States, of course. For the broader luxury sectors, that can continue to power sales growth in the case where companies are seeing sales growth?
Yeah, absolutely. I think we continue to see international travel increase. We're not back to the pre-COVID 2019 levels yet. And especially we're not back anywhere close to where it used to be, that level of international travel by Chinese travelers. So we do expect that will continue to improve going forward.
We had a guest here in Europe on our show, Street Signs, that said, right now investors are viewing the luxury segment like this. It's either absolute luxury or nothing. In your mind, are you hearing that? Are you seeing it the same way? And does that explain some of the performance we're seeing from companies like Ferrari and Hermes, companies that are seen as even at the highest level of the luxury segment?
Yeah, I sympathize with that comment. I mean, when you go into recessionary periods or more difficult economic periods for consumers, you tend to have a more resilient performance of the really ultra high net worth individuals that tend to shop these products, right, compared to the more aspirational consumer. So I would identify with those comments. What I would say, though, is the sector is currently going through a slowdown, clearly. 2024 is going to be, especially the first half, a difficult period. Because of the high comparative base. I think investors in the space are trying to discern whether the 2024 will be a soft landing rather than a hard landing. Obviously, today's LVMH or last evening's results speak in favor of the narrative of the soft landing, which in itself helps gain confidence that we might be at the bottom, close to the bottom in terms of the earnings downgrade cycle.
Okay.